Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Yeah, I was absent Friday. We had some power outages here in Huntington Beach and so forth. So I'm back with you on a Tuesday. Let's get right into it again. Put some commentary in the chat box there. Give me a thumbs up, and let's get the channel growing. Still kind of need to get some more thumbs up and commentary and so forth. Also want to announce I'm going to have an upcoming class on taking advantage of some of the stocks moving. Oracle today, again, I keep referring to that. If you are looking for alternative ways to make money, bottom line, aside just from futures, and you're maybe intimidated by the options market, you may want to join me for that free class coming up here. Okay, let's get right into the charts. Without further ado here, let me share my screen here, and let's start with, actually, I wanted to start with Nat Gas because we did get long Nat Gas. We're using options also on here. We're using the Boyle to get long. We got long today on Nat Gas with the expectations that we may, with winter coming and hurricane season and all that, with the expectations that we could, in fact, rally today. If we can get some legs on that thing and break above 3, remember we've been up here a couple times, that would be really, really nice for our current position in the nat gas market. For futures, if we do pull back, obviously we've got some levels back here, and now we've got some resistance here, 286, but nat gas seems today, if we can get, again, we've had a lot of these moves, but I think now if we can traverse here past 286, I think we get up to 3, and that would really be nice for our current position in nat gas. So we did put that on today as to initiate the trade here. Okay, all right, so let's start there. Now, a couple things. We have CPI tomorrow. Generally, the S&P has been, again, even today, we've got this big rollover gap here. If you're using the adjusted chart, if you're using the SPY, we're actually pulling back from here. Using the contract specific, which is actually like what I like to do in front of the rollover, so we can eliminate that gap. We actually did pull back off of that level using the contract specific. And again, just a little tidbit here. I do use these as the rollover happens because, we eliminate these distortions on the chart. We get this big price disparity. So now coming in tomorrow, we're going to get a lot of volatility. And if we break 485 on the December contract here, which is the front month contract, we likely will go back down, probably go back down to maybe 450, even further. We're kind of just hanging around up here. You can see it's been a very choppy 2 days in front of that. So not really anything changing here. It's just kind of been kind of like here. And then we had that big sell-off off the numbers last week with the manufacturing. And so I think tomorrow is going to be a really impactful day with the CPI and so forth. So that's kind of where we're at, kind of hitting resistance here at 45.40. If we do go higher, there's a gap to fill and so forth. But generally speaking, averages have been very, very choppy. However, just to re-emphasize here, under the surface, there's been a ton of action. We actually had a really great week last week with Okta, and even Oracle had a nice move, as you saw, Apple and so on and so forth. So if you again, if you're not trading individual stocks with options, maybe this class, if you want to register for the class, just go down to the bottom and register, and I'll be obviously tweeting about that and so forth. Okay. Similarly, the NASDAQ, hit this resistance up here, and generally again been swinging back and forth. I think ultimately we go down to 15,130 if we have some weakness coming into the markets tomorrow. If we have a strong CPI number, that's probably what's going to push us down. On the Dow, similarly, just lots of chop, not a lot going on there. Russell still looking for a pullback below 1833, and then we have some levels up top here around 1900 and so forth. In the Russell, bonds have been consolidating, very, very coiled up here, which means that tomorrow we probably get a breakout. You can see how tight the 10-year and just across all the bond market. You can see very, very quiet there. Dollar is right at obviously a very critical point here. We've been consolidating here now for close to a week. You can see that right up against that 105 level, been just churning. I think tomorrow will be the day that possibly we, maybe break either to the upside or the downside. And then, all these currencies are going to get rolled over the next few days. And we also have ECB on Thursday, which could possibly move. But I think tomorrow is going to be the big mover across all the currencies. Really not a lot changing here. The currencies are kind of mirroring the dollar, just been sideways here. We've been in the Swissy for a little bit, as you know. We finally, just decided to push out of that because of the volatility tomorrow expected. So we're going to be out of that and then wait to see what happens tomorrow. But not really anything to really talk about with the currencies. Just been really just chopping around here. Yeah, again, notice the euro is at a very clear inflection point as well. If it breaks down or reverses like it did here, that's obviously going to be predicated on what the reaction to the CPI and the ECB. The ECB may also have some implications as well for some of these currencies. Other than the one currency that I keep talking about is the Mexican peso. That's actually having some really nice moves. If it does rally up again, there's still a chance to get a short up here. We came up off of that level there, had a really nice pop, and now we're kind of coming into some levels here. So if you want to trade a currency that's moving, go with the Mexican peso. It's $5 a tick as well. Metals also, after these really nice swings in silver, it's also consolidating. So nothing really to talk about there. Oil, we are edging higher, still not up to the level here that we are trying to get short with. So we'll see how that goes. And then nat gas, I just mentioned that. And we had a grain report today. Really didn't move the needle a whole lot. In fact, we just kind of came down a little bit. Looks like wheat bounced off of a pivot here, and corn also just very, very tightly called up. I suspected that maybe we get a breakout out of this kind of consolidation in corn from the grain report today, but that obviously did not happen. So we'll see how that goes. And also, lastly, VIX is kind of still in no man's land. Can't break below 13 and can't break above 16 or 18. Maybe tomorrow's the day we get some volatility spikes. I did write about it over the weekend. By the way, if you're not getting the newsletter, also go ahead and sign up for the newsletter. Came out a little bit late on Sunday because of all the issues that we've had with internet and power outages and stuff here in California. So, okay. Other than that, everybody, yep. So I do expect things to change. It's been a very challenging environment to trade the indexes. lots of chop, very low volatility. Perhaps that's going to change tomorrow and in coming days. We've got the Fed next week. The Oracle was a good earnings play, and now we have Lennar coming up, and then we're gonna finish out there's still some earnings next week, but then going into October we start up again. So that's really where all the action is in some of these earnings plays, that's where options come in really. Tremendous opportunities with the options market if you're so inclined to do that. Okay. All right, everybody. So again, I'll see you on Friday, hopefully, if nothing else happens here with the technology and power outages and so forth. But I'll talk to you then. And again, leave some commentary, sign up for the newsletter, and we'll see you on Friday. Okay. Take care.